bringing you information about the real estate market in Canada, particularly focused here on Ontario. And I hope you appreciate me sharing this information with you, as I definitely love researching it, putting it together, and bringing you this perspective from the market on a weekly basis. As I've been doing in the last couple of weeks, I'll be focused on the real estate market, and particularly here in the Greater Toronto Area, as you can obviously see from this article. And this is based on the most recent data that we have at the end of January. And I want to really show you and paint a picture for you what happened in January, obviously year to date. What are we seeing in terms of buyer and seller behavior? And I have some examples as well. Pretty much I'll show you some listings and the price that they actually sold for, and obviously what they listed for. And you'll really be able to connect the dots from there. So why don't we kick it off? This is an article by Jesse Bains from Yahoo Finance. Greater Toronto Area home prices jump in January TREB. So as we've been talking about in the last quite a bit, the trend is prices continue to increase, whereas homes available to purchase, both condominiums and freeholds, continue to decrease in terms of supply. So the Toronto Real Estate, or I should say the Toronto Regional Real Estate Board, which is TREB, says sales fell 18.2% year over year in January. So compared to last year, obviously there's less sale because of less supply in the market, not because home sales suddenly weren't a hot commodity. There weren't many to buy as listings fell by 15.5%. That's a big drop. So active listings dropped 44% to 4,100, the lowest in more than 2 decades, as a result of the tight market conditions and low interest rates that have helped push buyers into the market. Prices continue to soar 33.3% from last year and 4.1% compared to the previous month. So that's just from December, a 4.1 increase in January. And the markets that are the hottest at the moment, the largest year-over-year price increases were in Durham at 44.58%, Orangeville at almost 41%, and York Region at 38%. So as you can see from these numbers, large percent increases. Let's say you live in Oshawa, Whitby, Pickering, your prices increase 45%. That's crazy to me, if you ask, but it's a pretty good return if you actually invested or moved to these markets at that point. Continuing forward, it's clear that 2022 is starting off where 2021 ended in terms of the relationship between demand and supply in the GTA housing market. We have provincial and municipal elections this year in Ontario, said TREB CEO John DeMitchell. These are the levels of government whose policies impact real estate development the most. With that in mind, it's very important for voters to understand exactly what parties and individuals vying for public office propose to do to alleviate the lack of inventory and housing choice in the GTA in the years to come. You probably heard a lot of noise recently from provincial governments thinking about taking over from the municipal parties, and making certain decisions for them in terms of rezoning, making smaller, more dense areas, whereas right now, obviously, those decisions are with the municipalities, and the whole argument is eliminating red tape, making projects get approved quicker, and less restriction, less government intervention, and more, builders to be able to do things and different kind of buildings. So the Greater Toronto real estate market in 2022, as we continue, TREB expects 2022 to be another strong year. It predicts sales will dip to 110,000 for a couple of reasons, but prices will continue to go up. So again, sales will be less inventory in the market, at least as of end of January, but prices continue to increase. First, higher borrowing costs in 2022 will see some households on the margin of affordability, temporarily putting their purchase on hold. And then obviously the Bank of Canada has made it clear that it will begin raising rates, something TREB says historically leads to fewer transactions. Obviously less liquidity in the market, the less buyers we're going to see in the market, and obviously less sales. And obviously, as I've spoken and shared in the past videos, the year 2021 was something I've never seen before in terms of number of sales, price increases, and just activity in the market, and the number of mortgages taken out. So that may be an outlier, but I predict we won't see that kind of a market in terms of number of transactions, but pricing is still there higher and continues to increase month over month. And just to give you an example of a home here, in terms of how price increases have drastically gone up and some of the activity we're seeing in the market. This is actually from Daniel Delmelis. He's a realtor here in the city, or in the GTA I should say. And you can see here, this is a home in Brampton. It sold for 1.62 million in October. And as of February 6, 2022, so I recorded this on February 10th, so 4 days ago, this house sold again for $2 million. And let me show you the picture of the house. As you can see, this is the house in question. And this is the screenshot from House Sigma. You can see here, October 8th, 2021, it sold for 1.62 million. Here we go, end of January 28th, it sold for $2 million. That is 400,000 in 4 months. So almost, let's say almost 100,000, just for, for argument's sake. Each month that you owned and lived in this house, let's assume you made $100,000. Unreal. And I don't know if we're gonna call this speculation. I'm leaning towards calling speculation. That's unreal returns over a 4-month period. And talking about supply, this is an article, or not article, sorry. This is a Twitter thread by Scott Ingram. He's another realtor, and his is his bio, data-driven Toronto chartered accountant and realtor. And his data is fantastic. Follow him on Twitter. He definitely provides great information. And let's just look at the numbers. Active listings look in from yesterday. Condos still at a low level, about even with pre-pandemic 2020. Over the last 4 weeks, the pace of new additions, 54, works out to 2 a day for the whole of 416. So this is 416 active listings, so the city of Toronto. And you'll see for this chart, you see here at the start of the year, in February, middle of it, we had 1,400 active condominium listings, whereas last year, we can talk about in 2021, and also 2020, we can see these levels are much higher, 2,600 and 3,200. Obviously, huge difference in terms of number from there. And continuing forward in terms of freeholds in the 416, freeholds low-rise houses are following a normal curve, just at lower levels, about 25% below 2020 and 2021, which were both low years in itself. So you can see here we have about 900 at the end or at the start of February, whereas compared to 2020 and 2021, it was hovering about 1,100. And obviously, you can see numbers here in 2018, 2019, they're almost, in the 1,900 range at that point. So definitely, listings are down. Supply and demand is really playing in the market, and obviously, the liquidity and low mortgage rates is having a high impact in terms of pricing and supply. Mostly, what I'm hearing in terms of the market, and obviously just following others, is that obviously more people want to refinance. The low rates obviously encourage borrowing, and that's obviously leading to inflation in home prices and a lot of money being thrown for the less number of homes and condos on the market. So I hope you found this helpful. I will continue to come and provide education and demystify the Ontario housing market, the Canadian housing market, interest rates, and obviously investing as a whole, and for obviously end-use home as people look to move out of homes, sell something, get something bigger, or even downsize from that perspective. So I hope you found this information helpful. I always appreciate a like, a comment, even a dislike. Any feedback is helpful. And if you subscribe, I'll be over the moon. So thank you for your time, and I hope you found this video helpful. Thank you.